Let's start out with the really, really interesting news that Elon is following up on his claims and his frustration with Sam Altman and OpenAI, and he's suing. So here's from the Wall Street Journal. Musk alleges that with ChatGPT, OpenAI and Microsoft have effectively achieved an early version of artificial general intelligence, or AGI. In essence, that the machines are able to reason like humans. Quote, OpenAI Inc. has been transformed into a closed source, de facto subsidiary of the largest technology company in the world, Microsoft, comma, end quote, the suit says. Under its new board, it is not just developing, but is actually refining an AGI to maximize profits from Microsoft rather than for the benefit of humanity, end quote. Musk is bringing claims including breach of contract, breach of fiduciary duty, unfair business practices against OpenAI and the two co-founders, Altman and Brockman. In the lawsuit, he asks for an order compelling OpenAI to make all of its research and technology open to the public, and for the company and Altman to be required to give up all money received as a result of the practices alleged to be unlawful. So it appears that Elon's not asking for the money to come to him. He just wants the money to do what it was originally going to do, benefit humanity. Then in other Elon news, he's doubled down about his concerns about running out of electricity supply, and now posts that this shortage will likely be starting to be felt as early as 2026. The shortfall is not due to regular growth or even increased needs for electric cars. The culprit is the data centers, which, as you well know, use massive amounts of power to cool the servers. He has not yet offered a solution, but he's often said that merely trumpeting a shortage will result in humans finding new resources. He was certainly right about that when he had made previous headlines about the shortages of lithium and nickel. And he also created his own answer with regard to refining of lithium by starting his own refining facility down in Corpus Christi. Okay, this is Randy Kirk. If you haven't done it yet, please hit the like button. Oh, wait. No, actually hit the like button. Subscribe, hit notify. Today, I've got Cern Basher coming back. Listen, this is today's the day when other vehicles will be able to use the Tesla chargers. And so what a more perfect day than today than to have Cern come in and do an amazing deep dive on the supercharger business and it's true, hundreds of billions of dollars of valuation that it adds to the Tesla story, which nobody's going to pay any attention to, but we will dive into it. And as the numbers get bigger and bigger and bigger, maybe the street will recognize this as yet another place that they're not giving a full value to the Tesla story. And then Larry will join me, of course, for Good News Friday. This would be a perfect time to jump down and, just take a minute, just put it on pause, jump down, hit the Patreon button and go in and, join Patreon. I've got a $3 level, a $5 level, $10 level, and you get prizes, you get stuff. All that information is down below. And of course, information on how you can buy a Cybertruck bottle opener. This from Barron's. For the first 2 months of the year, BYD sold 160,000 all-electric vehicles. That is down about 1% year over year. Now, that's for 2 months. The reason I'm telling you about the 2 months rather than just last month is because Chinese New Year was in February this year, it was in January last year. So either month is not going to give you the real numbers, but by the end of February, now you have some realistic numbers that you can pay attention to. Tesla does not report monthly sales or regional sales, but Wall Street analysts track data from industry sources. Citibank's Jeff Chung estimates that Tesla sold about 68,000 vehicles in China in the first 2 months of the year, up about 13%. We will have the China numbers, of course, later. I think usually 3 or 4 days into the month, we get the overall China wholesale numbers, which should give us the final information on that. Okay, then from Reuters, Tesla unveiled new incentives. This is also China. Unveiled new incentives, including insurance subsidies, on Friday to woo customers in the world's largest auto market, where the U.S. electric vehicle giant has a protracted price war going against entrenched rivals Yeah, okay, whatever. Customers picking up existing inventories of Model 3 sedans, Model Y SUVs by the end of March will be entitled to a maximum of 34,600 won, or about $4,800 worth of incentives, Tesla said in a post on its Weibo account. Among the incentives are an 8,000 won discount in the car insurance products, and a 10,000 won discount if the buyer chooses a change of paint. Tesla also offers limited time preferential financing plans that could save up to 16,600 won. So the financing is not going to cost Tesla as much as the benefit that they're giving. The insurance gets those folks into their insurance program, which is a long-term benefit. If they give them a deal now to get them started using Tesla insurance, people have the tendency to just stick with the plan once their deal runs out. And then on a paint change, of course, that paint change probably costs Tesla almost nothing. So those are three pretty cool incentives to be offering at this time. Meanwhile, back in the United States, Tesla has increased the Model Y rear-wheel drive and long-range prices by $1,000 in the U.S., according to Sawyer Merritt. Of course, this is just a return of the temporary discounts that were offered earlier in February that were set to expire yesterday and have expired. No evidence that these are going to be continued. We'll see what happens in the course of the rest of the month. CNBC says that as of Thursday, owners of Ford electric vehicles, the Mustang Mach-E and the F-150 Lightning, will finally have the ability to power up at Tesla Superchargers, as mentioned a few minutes ago. Ford CEO Jim Farley wrote in a post on LinkedIn that the charging partnership, which involves use of fast charging adapters, should improve the EV ownership experience, quote unquote, for EV drivers, noting that I've tested it myself and it works great. Currently, Tesla operates about 1 in 3 charging stations in the US. Even if adoption of battery electric vehicles slows domestically and the fleet of electric vehicles is smaller than what the government and many automakers planned 6 months ago, Tesla could still see $6 billion to $12 billion a year by 2030 from its expanding charging business, Furani said in an email. Oh, so if it slows down, which it won't, they're projecting that as the fleet grows and grows and grows, and Tesla owns more than half the charging stations. Well, actually, 1 in 3 charging stations. That's stations, but I think it's more than half of the charging pumps are stands or stalls, I guess is the best word for it. Yeah, with their ownership, and not only that, growing by 1 additional stall per hour, 24 hours a day, 365 a year, and that's what it's growing at now. Yeah, it's going to be 6 to 12 billion is a small number. Anyway, be sure to check out later today. Well, Cern Basher and I will go over that in great detail. So this is a super genius move. The overall market for BEVs in the U.S. is constrained primarily by price and range fears. While the range anxiety has not been an issue for Tesla for quite a while now, it is a real issue for the other brands, and that creates an overall fear for the category. Somebody's sitting there thinking about an EV, and they're going, well, I can't get one of those because, my friend who owns a Ford or owns a Chevy or owns something else, they have a horrible experience when they go in to get charges because the machines don't work, blah, 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 blah. That impacts your entire thinking about the category. Believe me, you've probably had the conversation with some of your friends or associates. People say, yeah, it's a problem. You can't. Anyway, by opening up the Tesla Superchargers to all brands, this will quickly dispel that issue, eliminate the issue, probably in months, and increase the total demand. It also helps the mission, and it adds billions in profits over time, as just noted. But that guy, he's not even close. Wait till you see this story we'll have later today. So Toyota unveiled a humanoid robot yesterday, as I mentioned last night in our show. That makes 19 total companies that are now in the pool. All right. This can only create more spotlight on the category, and eventually that is going to impact Tesla stock price, in my humble opinion. Unitree, their H1 has now broken the humanoid robot speed world record. And there's some videos on that. You can find those on X, etc., or just look up Unitree H1 on YouTube. The humanoid robot, driven by the robot AI world model, unlocks many new skills. Scott Walker is impressed with the speed. Anyway, this suggests that the other makers will have no real issue updating their speeds, getting their speeds up to where we need them to be. We talked about that over the last couple of days with Scott Walter and with John Gibbs. Good videos if you want to go back and check those out. This is the key. The next key is you just got to get these robots to work faster. I don't think it's going to be an issue. And within a month or two, I think we're going to see that they're all working up to speed. Okay, another apparent change in the truflation numbers. I'm beginning to see a trend here. On the first of the month, they're getting a whole bunch of data. And that data then is looking like a big change in one day. So every day on the first, I think we're going to see this. But where we were sliding up, we were around 1.87 or something yesterday. Boom, today dropped to 1.71 again, where it was about a week ago before it started its move. So anyway, really, really good at 1.71. I'm, as much as I don't like all these big moves, these big jumps and stuff as the data comes in, the reality is I think that their number is probably way better. Well, I know it's way better than the CPI. Okay, from Forbes, this is a really, listen up carefully here. This is really big, all right? This is a two times a year they do this survey on small businesses. But unlike the other small business surveys, they're looking at some, you can't call them small businesses, 100,000 employee businesses. So in doing that, we're getting a very different look. And then they divide it up into the very small businesses that I have been involved with my entire career, like bike shops and locksmiths and small lawyers' offices and whatnot, and these mega businesses. Well, it turns out 55% of small and mid-sized business owners surveyed are optimistic about the national economy, and 79% are highly optimistic about their own business prospects this year. Big numbers. 55% like the look of the national economy, almost 80% optimistic about their own business. A new survey of small and mid-sized business found that business owners' optimism about economic conditions over the next 6 months has reached a 22-year high. A 22-year high. They're having lessening fears about a recession. This is called a PNC, puts out this semi-annual study. They discovered the majority of the business are highly optimistic about the national economy, rocketing from just 34% last fall and 26% a year ago. So a year ago, 26% thought things were going to be great in the economy, and then 34% 6 months ago. And now it's up to 55% seeing things doing well. With inflation pressures easing, fewer than half of the businesses expect to raise prices in the next 6 months. More than 6 in 10 business owners report being highly optimistic about their local economy. That's up from 47%. Now, listen again, and 30% a year ago. So 30% a year ago were highly optimistic, 47% 6 months ago, but now it's 63% highly optimistic about their own local economy. Optimism also runs high about their own business. We just talked about that. I'm not going to repeat all that. Construction leads all sectors with 85 saying good times coming. Larger revenue companies, 20 million to 250 million. Those business leaders expressed the most optimism about both the national and local economies, as well as their own businesses. Small companies like 100,000 to 3 million, those are less optimistic. But it says business leaders see their own businesses continuing to do well in a strong and improving economy, whereas previously they've been telling us they're doing well despite concerns about the overall economy. Risks remain. PNC expects near-term economic growth that will be looking closely at employment data, inflation, and when and how the Federal Reserve makes their decisions. Based on the survey results, inflation pressures appear to be lessening. Now listen to this. Fewer than half of the businesses expected to increase prices. That was up 55% in the fall. Of those expecting to take that step, just over 1 in 10 expect to raise them by 5% or more. That's a big drop from last fall at just 1 in 10, so less than 10%. It was 12%, and last year it was 25%. So at the same time, 4 in 10, 40% of the businesses, they say they expect the prices their suppliers charge will increase in the next 6 months, down from 49% last spring. And 4 in 10 expect increases by supplier prices they are only looking at a modest 1 to 2% rise. So only 13% expect a rise of 5% or more. I would say that is really, really, in terms of what the Fed wants the inflation perception to go away. And that looks like the perception has gone away. Supply chain issues, which were major contributors to inflation spike 2021 and into last year, have largely dissipated. Yet employers remain under pressure due to increasing costs for hiring and compensation. This, of course, is the Fed's last piece, in addition to housing. The tight labor market has loosened somewhat. We may see pressures loosening, but they talked about financing. They said only basically almost the same things we heard in the other report. A very few low percent of these companies are worried about financing, and almost nobody plans to go to the regular credit markets to get their financing. I guess they're going to go to mom, or they're going to go to the credit cards. I don't know what they're going to do, but they are not interested in going to traditional places to get loans, and almost none of them need loans. So it's very, very, very coincidental with the other reports that we've been getting. But one of the biggest challenges still is labor. Despite hopes that the Federal Reserve might soon lower rates because of inflation starting to come down, the central bank kept them the same. Oh, I'm sorry. That was, how come it said it was, okay. Hiring challenges. Small businesses continue to face challenges in finding workers. According to the surveys, owners and hiring managers say the problem is lack of applicants, followed by candidates' lack of experience, followed by high salary and benefit demands from these people that don't know how to do their job. However, 2 in 10 expect to increase full-time workforce, up from only 9% last fall. Anyway, I thought that was really, really interesting. I think these business owners have their finger on the pulse more than the Fed does, and I think the Fed should listen to what they were saying. All right, let's take a look at the markets. Last time I looked, okay, what did I say yesterday? I know once in a while I'm right. I mean, that's why you listen, right? Because every once in a while I get it right. And what I said yesterday was I thought things would be dull today and dull for the next week, maybe even for 2 weeks. And the last time I checked, things were dull. Anyway, let's start with Tesla is down $1.83 this morning, sitting at almost exactly 200. It seems to keep bouncing off of 200. It was a little better earlier, and now it is turning, going up again. We have got the Dow down 126. We've got the NASDAQ up 26, S&P up $1.67. That would be, and then the Magnificent Seven is completely mixed. NVIDIA and Meta are both doing quite well this morning. The rest of it kind of, again, boring. We have got the Cathie Woods are all, single digits. CRISPR is the only one that's over $1 in terms of going up this morning, but very mixed, some up, some down, all over the place. Percentage-wise, we have got the Dow up 0.32%, NASDAQ, I'm sorry, down 0.32%. We've got the NASDAQ up 0.18%. We've got the S&P up just 0.07%, and Tesla down 0.83%. And right now, sitting right at that $200 level. All right, let's take a look at the bonds. The bonds are currently, we are at up 0.4 basis points. So again, really not moving that much. Just changed as we're watching 0.8, almost a full basis, back and forth. Anyway, right, or not even a full basis point up this morning. All the rest are down. All the rest, 10-year is now unchanged. I mean, a lot of motion, a lot of activity right now in this bond market. Usually it sits there for quite a while, not going anywhere. Right now it's moving around a lot, but everything else is down this morning, and now the 10-year is even down. This is moving very fast. We'll now look at the oil patch. Oil is up $1.49, not quite to 80 yet on the Texas Intermediate. Brent up about the same amount, still in the $4.50 higher range. Natural gas down this morning $1. I'm sorry, 1%. 1%, not a dollar. It's sitting at about $1.81. And then we go over to the dollar steady. We've got gold is not going anywhere. Copper not going anywhere. Crypto not going anywhere. I mean, literally. I mean, it's $30. Okay, it's sitting at 62,115, but it's at $30 down right now, not going anywhere. And yeah, so it's the Dow being down 120 is about the only thing that is showing any real change right now. Everything else is kind of sticking right. I mean, the 10-year still sitting there right at unchanged. Wow, very interesting. And the going back to Tesla again, it has slipped slightly under 200, now down $2.01. All right, so my video yesterday with Dr. John Gibbs, also known as Dr. Know-It-All, was controversial. I won't tell you why, because if I do, they might short shift my algorithm and how many people they show it to. So I'm not going to tell you why it was controversial. I will put a card up because it was, well, anyway, yeah, I'm having some problems yesterday because I've talked about some controversial things. So if you want to see the John Gibbs story, or you might also want to go back and look at the Good News Thursday last night with Bradford Ferguson, which was also somehow it didn't get as much exposure as normal. And no, it wasn't because of anything. Anyway, I'm just telling you, here's the card right here for the John Gibbs thing. You definitely want to take a look at that. John Gibbs even described it as one of the best interviews we've ever done together, and we've done a lot. So that, I think, is all I got. And so we'll be seeing you later today with Cern Basher around the noon hour and Larry Goldberg for Good News Friday night. It's been great talking to you.